Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and today I am just going to talk about Apple Incorporated. Apple is having a pretty it's having a pretty bad day, but again, every stock is pretty much doing awfully on the session. Apple is just one of those names where it has an impact on the indexes, and right now it's having a less of an impact. It is heavily weighted on the NASDAQ and the S&P 500, but yeah, it is falling less than the S&P 500 if I'm correct. I think it only fell by 1%, while the S&P 500 did fall by around 1.5%. And basically, it just comes to show that Apple is less volatile than the market, so it does have a lower beta, and that's kind of a good thing. The bad thing I see with Apple is that, again, it is still in a downtrend. It really hasn't it hasn't broken out of its own downtrend yet. It is above that 20-day moving average, but it's still below the 50-day moving average, and this stock chart is trending below averages. For example, it trades above the 20-day moving average temporarily, closes below it temporarily, closes below it. All the while, it closes below the 50-day moving average, it stays above it temporarily, and it's not even able to break above the 50-day moving average this time around before it rolls over into another decline. I want you guys to watch over this trend line right here. Chances are it's probably going to break down below that trend line. This 20-day moving average isn't going to be a very good area to be buying Apple Corporation. I think it should just be avoided, unless if you're a hardcore scalper, but again, I wouldn't be buying Apple at these levels. I anticipate it to break below that 20-day moving average, eventually breaking below that trend line, and eventually reaching that 200-day moving average, and perhaps hit some support right on that 200-day moving average. So again, you know, the volume is pretty low on Apple, and that's probably the main reason why it hasn't had such a strong decline on the session. But people might do a little bit more window dressing. They might be cutting back on their risk exposure, but right now Apple isn't really that risky of an equity, but it also has a very lofty market capitalization, and it makes me really wonder where the money is going to come from to bid up a stock from $500 billion up to $1 trillion. You guys do realize the stock of broad money in the United States is only $12 trillion. So I don't know where people are coming up with this idea that people are going to put $500 billion into Apple. And perhaps it's not going to be necessarily $500 billion. It might just be $500 billion in implied value, and perhaps people might just increase the amount of money they stick into Apple slightly over time, and the bids might just kind of float the stock up a little bit, and perhaps it might not take that much money. But I still think it's going to take a substantial amount of cash. I mean, I don't know. I don't think 10% of the money in the United States will just gravitate towards one stock in terms of equity purchases. So that's just me personally. People are calling for $2,000 per share, maybe $2 trillion market capitalization. That should be reasonable based upon their growth, blah, blah, blah. Realistically, though, again, I'm having a hard time believing this stock is going to be able to attract that much money. And let's just take it one day at a time. But me personally, I think that Apple is a great company, but getting people to buy the stock is a totally different question at this point. All right, take care.